Walgreens Stock Analysis. What is going on, guys? And that's what we're going to be talking about in this video here today. And to be honest, I didn't know if I was going to do an analysis on this stock, mainly because, guys, honestly, it's Walgreens. Like, it's not a sexy play. Like, Walgreens isn't a stock that's going to grow hundreds of % over the next, like, 5 or 10 years. It's just not. Like, it's been around for over 100 years. Like, it's just not going to grow that much. It's, like, basically a fact, more or less. But, you know, I decided I don't do a ton of value stocks on this channel. A lot of the stocks I do are, like, growth stocks. I think are going to, like, double up or triple up, which I think is good. But I also think it's good to have some value stocks in your portfolio. And I just feel like Walgreens is one of those stocks. It's like a really solid stock that you can add to your portfolio. And I figured, you know what? Why not? Let's do it. This is something I added to my portfolio. I actually sold out of my Upwork shares today, this being Thursday at the time of me filming this. So mainly, not because there's anything wrong with Upwork. By no means should you go sell Upwork. I actually love Upwork. But the thing is, like, I didn't get to build up the position as much as I wanted to. Like I said in a couple other videos, I had it at like $14 and now it's at like 35. So it's like, I just didn't get to build it out. I do have interest in getting back in it possibly one day, but as of right now, I'm like, let me just take the money and let me put it into something else that could possibly make me more money. So anyway, enough about Upwork. We're gonna get into Walgreens in this video, like I had already said. If you guys like this video, if you appreciate the content I've been putting out, make sure to like the video. That really helps out the channel in a massive, massive way. And don't forget to subscribe as well. We're coming up on 300 subscribers slowly but surely, guys. Once we get to 1,000, we're gonna see some really, really, really big content coming. So make sure to subscribe so you stick around for that, all right? So at the time of me filming this, like I said, this is Thursday, so it could change by the time you guys are seeing this, but at the time of me filming this, Walgreens is about $41 a share, right? About a $36 billion market cap in this company. And I'm sure all you guys watching this video, you have a general idea of the business model of Walgreens. It's the retail pharmacy leading supplier globally, as well as the wholesale pharmacy global leading supplier. The leader, okay? So they're ahead of CVS. Like I said before, they've been around for over 100 years. They have 100 years of trusted healthcare heritage and innovation in community and pharmacy wholesaling. They have almost 19,000 stores in 11 different countries, and they have over 400 distribution centers delivering to more than 24,000 pharmacies, doctors, health centers, and hospitals each year. And they are also the largest purchasers of prescription drugs and many other health well-being products. Their portfolio and retail business brands include Walgreens, Dani Rene, Boots and Alliance Healthcare, and Global Health, and they also have beauty products such as Number 7, Soap, Glow Tresere, Botox, Sleek Makeup, and Your Good Skin. In addition, they also own Rite Aid. I feel like a lot of people don't know that. They also own Rite Aid. I don't know why you wouldn't know that because I feel like that was pretty in the news, but they do own Rite Aid. They acquired Rite Aid in September 2017. They acquired 1,932 stores of Rite Aid for about $4.4 billion, give or take. So they have three real, I guess, divisions you can call them in their business model, okay? They have the retail pharmacy in the United States, then they have the retail pharmacy internationally, then they also have the wholesale pharmacy side of their business. In 2019, the U.S. retail pharmacy side did about $104.5 billion in sales. This compares to $87 billion in 2017 and $98 billion in 2019. Their gross profits for this division, those included $22 billion in 2017, $23.7 billion in 2018, and then $23.5 billion in 2019. As for their gross margins, those were 25.7% in 2017, 24.1% in 2018, and 22.5% in 2019. 74% of these sales came from around the pharmacy, okay? 74%. The other 26, that came from the retail side of the business in the United States. As for the international pharmacy side of the business, in 2019, they did about $11.5 billion in sales. This actually compares to $11.8 billion in 2017 and $12.2 billion in 2018. Their sales are broken down a little bit differently. So 64% of their sales actually came from the retail side of the business, while 36% came from the pharmacy side. As for the total sales from 2015 to 2019, that includes $103 billion, $117 billion, $118 billion, $131 billion, and $136 billion, again from 2015 to 2019 respectively. Well, their gross profit, on the other hand, from 2015 to 2019, $26 billion, $29.8 billion, $29.1 billion, $30.7 billion, and $30 billion, again, respectively. Currently, they have about $87 billion in total assets compared to $67 billion in 2019, $18 billion in total current assets compared to roughly the same $18.7 billion last year. So it's basically the same, like plus or minus. About $516 million in cash and cash equivalents, guys. So that's compared to over $1 billion last year, right? So a significant decrease in the cash and cash equivalents, but obviously the virus has definitely affected their business, so they probably had to spend a lot of cash here and there just to get by for operating operating expenses and stuff like that, okay? So not something I'm overly worried about looking at this. They have their total current liabilities set at $27 billion. Now guys, remember I talked about in my last video, I think it was the last stock analysis video I made, I think it was the Switch one. Go check that out if you haven't yet. But I talked about how like places or companies like this, I'm okay with owning them if they have a little bit more debt. And why is that? Because these buildings, these properties, they cost money to put up, guys. They're not cheap by any means. Wynn Resorts, they gotta have a lot of debt because those hotels aren't cheap. Switch, those buildings are not cheap. Walgreens, these retail stores are not cheap. They're just gonna have to go into a little more debt to build buildings. So like I just said, $27 billion in total current liabilities, $5.9 billion in current debt. Total debt is around $40 billion, but their net debt's actually only $15 billion, which surprises me it's that low. Free cash flow for the TTM is $4.1 billion. Their net income is $456 million, so they are profitable despite all of this. So you guys might be looking at this balance sheet and you might be saying, Josh, they had over $5 billion net income in 2018. They had $3.9 billion in net income in 2019. Obviously 2020 is kind of like a toss up. Like that's almost like a mulligan. Like you can forget about that more or less just because of the virus and what a big effect it had on so many businesses. Obviously that's more of a short-term thing because like I've said in many videos, I just don't believe this will be around forever, or at least it's going to impact the world like it is today forever. So, but you still might be thinking, so they had a $1.1 billion decline in net income from 2018 to 2019. Why are you looking into this company? Like, why is this even in your portfolio? Like, should it be? Like, should it be? Well, here's the thing. So in 2018, Walgreens actually entered in a transformational cost management program. So what does that mean? Basically, it means they want to optimize their spending. So when they did this, they had the goal, and they believe, and I believe it too, they were going to save in excess of $1.8 billion by fiscal year 2022, okay? So this is going to be a good long-term move is what I'm trying to say here. But in the short term, it's a big hassle because they had to close over 200 stores. They had to shut down. Obviously, shutting down stores is a big hassle. You got to lay off employees. You got to do this. You got to do that. It's a big hassle, right? So short term, their business was definitely affected. Just for a couple examples of how it was affected. So it led to a 20.7% decline in their net earnings. So obviously, that's a pretty steep thing, and that took a big hit on the business. But in addition to that, 14.8% decline in diluted net EPS. So like I just said, short term, obviously, it's going to be a little bit difficult for the company because they're closing stores. Maybe they're doing some different things. But in the long term, I believe this is going to be better. And why? Because that money is going to be spent more effectively and efficiently. And it's going to go into more stores that are going to make them more money, as opposed to those like retail stores that maybe just weren't doing that well. They weren't doing a ton of business. They were just like in the middle of nowhere. But instead, they're going to build stores in locations where they're really going to make them money. As of their most recent earnings in Q4 2020, their sales did increase by 2.3% to $34.7 billion from Q3. Their operating income decreased 26% to $650 million, so pretty steep decline in that operating income. For their EPS, that decreased 42.8% to 43 cents a year, so another pretty steep decline right there. As for the year-over-year sales, those did increase 2% actually to $139.5 billion. Operating income, another big hit here, 73.7% decrease to $1.3 billion. EPS, an even bigger hit, 88% decline to 52 cents per share. Net cash provided by operating activity was actually also down $5.5 billion for a decrease of $109 million year over year. Their free cash flow actually increased to 5.6% to $4.1 billion. And these results actually came in on the high end of the guidance that was provided by their management team, believe it or not, the high end. So for 2021, the guidance was provided that to investors that they're gonna see low single-digit growth, okay? So they're gonna see low single-digit growth. So it's probably not gonna be a 10, 20% revenue growth here, okay? Now looking at what analysts have to say, analysts was actually right in line with the guidance that Walgreens management team provided. So 3% projected growth in sales next year, 7.7% growth next year projected, and just about 7% for the next 5 years. Now here's the thing, guys. When I was going over this stock and I was looking over everything, I didn't know if I was gonna buy it or not, and I didn't know if I should buy it, but I ultimately decided to buy it because I think it's a good turnaround play. I think it's a good value play. It's something I think that's gonna make my portfolio a little bit more rock solid. But anyway, the point is, just because I do these stock analysis videos does not mean I'm actually gonna buy this stock, okay? So just because I have a bullish thesis on a stock or maybe a theory that is really attractive does not mean you should buy this stock, okay? You gotta do your own research and your own due diligence. And even though I look into a stock and I might like it, first off, it doesn't mean you should buy it. But secondly, it's just that it doesn't mean I'm gonna buy it because maybe I just see better opportunities elsewhere. So let's start with this, okay? So the number of people getting flu shots is higher than ever before. The number of Americans getting flu shots is on the rise this year, in a rare bright spot for health experts worry about a combination of the virus and the flu hitting the public this fall. New data from the health IT firm IQVIA finds that 23.5 million people got the flu shot from August 7th through October 2nd. Compared with 12.6 during the same time frame in 2019. So why is that important, okay? Well, keep in mind, 78%, all right, 78% of the United States citizens live within 5 miles of a Walgreens. So you can go get a flu shot, you can be back in 15 minutes. It's like that convenient. You can go, walk out the front door, get a flu shot, you're back, your lunch break's not even over yet, you still got 45 minutes to go. Very quick, very easy, right? That's the first thing, convenience, right? So what happens when you go to get a flu shot, right? Oh, well, you know what? I need to go to Dave's, I need to go to Walmart, I need to get a couple of different things. But Walgreens has this stuff. I'm going to get a flu shot. I'll just buy this stuff there, right? That's right. People go in the store and they buy more stuff. Right, guys? They buy more stuff. It's convenient for them, so they buy more stuff. Very, very important. So, what happens when the vax comes out? What happens when the vaccine comes out for the virus, guys, right? What happens? Well, let's see. 78% of Americans live within 5 miles of a Walgreens, right? They want to buy more stuff if they go in there and get a flu shot. The vax comes out, the same thing's going to happen. And what does the CDC want? The CDC wants that vax to be delivered as fast as possible, right? Obviously, the frontline workers first, but once they have enough, they're going to want that vax to be delivered as fast as possible, which leads to the same exact thing happening, guys. The same exact thing. Like, does it even make sense to have someone else distribute the vaccine if 78% of Americans live within 5 miles of a Walgreens? I think not, guys. I really think not. Additionally, the company's also diversified in what they sell, guys. They aren't just selling one thing. They have the pharmacy, they have groceries, they have drinks, they have health products, they have beauty products. They have a ton of different things they sell in that store. It's not just one size fits all. Now, I know you guys are thinking, well, what about Amazon? Amazon's entering the pharmacy business. What about them? All right, guys. First off, Amazon entered the pharmacy business over 2 years ago, okay? So hold your horses on that. This was a very short-term drop when this stock hit because of that Amazon news, okay? Secondly, while I do see Amazon being some sort of competitor, I don't think it's right for me to say they're not going to be any competitor at all. I don't know if Amazon's actually going to be able to overtake Walgreens like it has done with some other industries. Well, first off, in the pharmacy industry, we got the waiting game, right? So obviously, when your prescription is ready, you can just go and pick it up at a Walgreens, CVS, Walmart, whatever the case may be. When it's ready, you just go get it, right? And you can get it whenever you want. Chances are, if it's a medication you need, and if it's for your health, you're not going to want to wait for that, right? So what happens if the prescriptions say they get lost in the mail? What happens if they're delayed? What happens if there's a snowstorm and they don't come in on time and you have to go days or weeks without that? We've seen this before. We saw Amazon get really backed up earlier this year because of the virus, and it took weeks to get packages. I was ordering packages. It took me maybe a month to get. It took a long time to get, guys. So who's to say that can't happen again? Who's to say that a package can't get lost in the mail? Who's to say that you're not going to have to wait longer for your prescription and you're going to have to call up Amazon and say, hey, my package isn't here yet. I really need it. Like, where is it? And they're like, oh, it didn't get shipped out right away. We'll take care of that right now. Or what else? What's the wrong order? What if they send you the wrong prescription and they send that order to the wrong house? And it's just like a really big scenario. Like, I can tell you, I've gotten tons of packages from Amazon that weren't mine. It's just, I don't know. I don't want to say it's a fact, but it happens. Like, they mess up. It's human. It's human error. They can absolutely mess up. And just because they can mess up on a pair of skis or maybe some lights or a camera doesn't mean they can't mess up on pharmaceuticals either. I can't even talk. Pharmaceuticals either. There we go. But then in addition to that, there's also just a level of trust that comes into play, guys. So when you go to a pharmacy, obviously that pharmacist is giving you that prescription, right? And you trust them to give you the right prescription. They trust you to give you the right amount of that prescription. So who are you going to trust more? A pharmacist or some random guy from Amazon Flex, right, who's just doing that on the side? It's just, I don't know, I feel better, me personally, I just feel better about going to the pharmacy, someone that has the background, the doctorate, like just all of that in their back pocket, as opposed to some guy who could be 18 years old and just delivering things for the fun of it, right, guys? Now, lastly, CVS, guys, okay? So in my opinion, CVS is probably their main competitor, okay? So CVS is over $70 a share at the time of me filming this. They have over a $95 billion market cap, okay? Analysts expect CVS to grow under 4% in sales next year. And they also have growth estimates next year at 1.5%. 1.5%. and the next 5 years of under 5%. And it's trading at a $95 billion market cap compared to Walgreens' $36 billion market cap. And here's another thing to throw in that bag. Walgreens trades at a forward PE of under 10. At the time of filming this, it was under 9. I don't know when it's going to be exactly when I get the screenshot of it, but when I first looked at it today, it was under 9. Under 9, guys. Like, what? What is that? It's got a price to sales ratio of under 1 and a price to book ratio of under 2. Like I said before, guys, Walgreens is, in my opinion, undervalued. I feel like this is just getting overlooked for really not good reasons. Like, because the business is making short-term changes for long-term gain, the stock price is getting penalized for that, in my opinion. But like I said, I feel like this is a good rock for your portfolio. It's a good value play. I'm putting it in my portfolio. Like I said, I didn't know if I was going to do it, but after completing my research, I did decide to put it in my portfolio. I don't know if you guys are going to do the same, because make sure you're doing your own research and your own due diligence. If you did like this video, if you did get some value out of it, please drop a like on the video. That really helps out the channel a massive way. Don't forget to subscribe to the channel as well. That also really helps out the channel. I'd really like to scale this up to 1,000 subscribers really relatively soon, within the next year at the very least, but obviously within the next 6 months would probably be ideal. So if you do subscribe, I really appreciate that. And thanks to all of you guys who subscribed, who like the video. Let me know down in the comments what you think of Walgreens and if you're going to buy it, or what other value stocks you own in your portfolio. And I will see you guys in the next video.